thought of that GST is going to be a single rate. Okay, everyone used to say single rate, single rate. Now we are coming to almost 5 rates are concerned. If you see the gold and silver, which we decided in 5%, 12%, 18%, and 28% plus cess and all these things are concerned. Another concern we has, whatever happens, better not to make any distinction between goods and services. But now we are going to have that distinction between goods and services. But of course, service is going to fall, I think, in 18% slab. So now we are going to have so many rates are concerned. We are making a provision which necessitate to make a distinction between goods, so far services and goods are concerned. So do you think that it's a better proposition that we are going to have?
First of all, even in other federal structure, the single rate is very difficult to have. In the European Union, generally you will find a common rate for relatively essential commodity and for higher rate for other commodities. But now we here have 5 rates. Why is it so? Because we started with a different situation. There was a VAT and there was this Government of India send VAT with subsidy. The advantage of this is the difference between this rate and existing rates is very small. Otherwise, if you are only one rate, say at 16, then some rates will have to be jacked up from 8 to 16, and that is very difficult to explain to the concerned trade bodies. So eventually, it is not the visual simplicity which matters. It is the traders getting used to it. That is the essential reason. You could have asked another question. Sir, you have said, or Dr. Aguti has said, that it will be only one tax and no more tax. I just explained that it will be two-phase introduction, petroleum, but then you are saying, you see, service tax and service and goods effectively, services are getting the same input, ITC, goods are getting involving goods and services, and the goods are getting also ITC involving goods and services. So effectively, they are like twins, there is no problem. Yes.
There are a couple of questions.
Sure.
The first question is,
you had pointed out that the Empowered Committee was able to resolve a lot of disputes within itself. So, if you already have a running mechanism in the form of the Empowered Committee, and you already have a constitutional provision for an interstate council, why did you create a particular body like the GST Council? You could have just created one more interstate council. Or you could have just continued with the Empowered Committee of Finance Ministers. That is one thing. And the second question is, don't you think that the manufacturing states are getting a really raw deal in this? If you change it from an housing-based to a consumption-based tax system, don't you think that I am making goods and now somebody else is going to take away my revenue? So don't you think that the consumption-based states, they are getting 2 bites of the cherry, while the origin-based, the manufacturing states are getting a raw deal?
Very good question. First of all, you see, as ex-chairman of the State Empowered Committee, I would have loved to accept it. But that would be taking more food than I can buy. Because there are involved here the taxes which are not state's domain at all. So union government's view will have to be hard. And after a few iterations where we have reached, I have just explained, it is evenly balanced between center and the state. In fact, I will request incidentally Mr. Goel to take this message on to who matters, that this GST Council should not meet in the North Block. It should not look like an extension of Union Finance Ministry. Then it's gone. So the Brazil experience will repeat itself. There should be a separate place, and it should be equidistant from center and the state, right? So just convey this message. What you said about the Empowered Committee doing the job, what this GST Council is doing, what the Empowered Committee was doing for VAT, except that there is a central input in it, and with lot of caution, there will not be any imposition. That also depends on whoever is the Union Finance Minister, and I would like to have my trust on whoever is the Finance Minister. And I have seen personalities grow. see, rather than being flanked by only group of officials and so forth, if you are being flanked by state finance minister who have their necessary belligerence, you shape up. Okay.
Thank you very much, sir. I would now like to ask our Vice Chancellor to present Dr. Dasgupta with a token of our appreciation. Sorry, sir. Oh, there is another.
My question is with respect to the structure of the GST. Sir, in 2016, I think Arvind Subramaniam came out with a report of Empowered Committee, where he argued that nearly 40% of the sales tax, which is levied on petroleum and exempted goods, will remain with the state government. And therefore, sir, my question is, sir, we have so many tax slabs in GST, we have exempted so many goods, and just 60% is subsumed in the, with respect to sales tax. Therefore, is it really a GST that we are talking about, or just a kind of fast system?
It's a fact that petroleum and petro products occupy a very substantial portion of the revenue earnings of not only states but also of center. States are basically little nervous when a new thing is introduced, but they do not want to stick to this tendency, this proclivity for too long. It's only for a few years, and Mr. Subramaniam should have known that. In many other countries, it has been a two-phase introduction. So, if one forgets that it is a phasing part, then such statements can be not. I'm not talking about you, but someone who wants to have immediately, let us go for, that's a sure recipe for disaster. If you just do that without understanding the ground reality, it will be disaster.
So would now be presenting a memento to Dr. Dasgupta. We would now be dispersing for tea for a period of 15 minutes, and please, I would request all of you to be back on time.
So I think they are reserving some for me and others.
Sir, it's an interesting, dear questions.
Very much for this opportunity. It's always a pleasure to be back in academics and to interact with faculty and students. So we already have heard, Dr. Dasgupta, who's a person who's been instrumental in firstly introducing VAT in India and thereafter having the broad framework ready for the GST. And he's also taken a lot of questions and almost explained the complete background. So I'll try to skip something which has already been spoken about, and then maybe we are already running behind the schedule, and then take questions more. So that, and also try to share some of my experiences, what has been happening in the GST Council, and also I've been told to little bit explain about the basic concepts of input tax credit, because that is something which looks very easy, but maybe many people don't understand that what exactly it is. So just let's look at, what's the present type of indirect taxes which are being levied by the center. So the whole lot of these indirect taxes which are being levied by the center, and they are being administered by CBEC, that is Central Board of Excise and Customs. There's a central excise duty which is levied at the stage of manufacturing. Then the service tax on the provision of services. Then we have other taxes like special additional duty, countervailing duty, other cesses and surcharges. Then the central state tax was talked about when the goods moved from one state to another, central sales tax being levied. So it was a tax which was levied by the central government but was being collected and retained by the states. Again, custom duty and the export duty. So if you, yeah, and similarly, like there are a number of indirect taxes which are being levied by the states. The most important being the VAT, and the entry tax. And other than that, so which is normally the VAT and the entry tax are administered by the commercial tax department, and other than that there are other taxes like octroi, entertainment tax, luxury tax, taxes on lottery and gambling, excise duties on medicine and toiletry products, state excise duty on liquor, electricity duty, stamp duty. So the whole rate of these indirect taxes which are administered by other departments other than the commercial tax department. So if you look from now a taxpayer point of view, so he has so many taxes and so many different authorities to deal with. So we had a regime in India where we had multiple taxes and multiple authorities. So a taxpayer normally, or any industrialist or a trader, would have to deal with multiple authorities, file number of returns, and he had an interface with number of authorities. So which was something which was against the principles of ease of doing business, and also it was also a heavy cost of administration on the part of the government. So the thinking has been going on for a long time that we should see to it that how we can merge more and more taxes so that there is a unique tax, single tax to the extent possible, and the interface that a taxpayer has is also minimized as far as possible. Then there is another very important concept of cascading of taxes which has been taking place in India. So over a time the attempt has been made to reduce it, but still it has totally not been eliminated. So in the future slides, further slides, we will see how attempts have been made to reduce cascading of taxes. So this concept was already explained by Dr. Das Gupta. That is that earlier what used to happen is that suppose you take a car manufacturing plant, so there are inputs of steel, tires, so there's something excise is paid on that. So the finally when the car was being produced, so there were tax on tax, so that there are say 100 rupees and there's a tax component of 10, so the tax was not being levied on 90 but on 100. So on the 10 which is the tax portion you were levying additional tax, so which is the concept of cascading, which was leading to increased costs and also increased burden on the consumers, and also leading to higher taxation and a tendency on the part of traders, industrialists to as far as possible evade taxes. Now why there was a need for having this constitutional amendment? Again, because we have a clear demarcation of the fiscal powers between the state and the center, and so we had explained earlier the VAT and other taxes were being levied by the central government. On the other hand, excise and the service tax was being levied by the union government. Now in case we wanted to combine these taxes and have a single tax, then obviously there was a need for a constitutional amendment. And this was a constitutional amendment which not only required 2/3 majority in both Lok Sabha and Rajya Sabha, but also required ratification of the 50% of the state governments. So it was a major reform and a major consensus building that was required before such a constitutional amendment could be moved. So just to very briefly I will run through it to give a historical perspective. So again it was briefly touched. So before 1986 there was total denial of credit. So I am saying that earlier what happened was that in case there were taxes embedded of say inputs, say tires, steel, so which were again being taxed. The first steps were taken in the 1986 where the MODVAT was introduced, where ITC, that is input tax credit, was allowed on selected commodities. And thereafter in the 2003-04 budget, as far as the excise component was concerned, we introduced the concept of SENVAT, where all commodities were covered in the chain. So similarly in the service tax, it was introduced in the year 1994 with only 3 services, but it was mentioned now the total revenue being collected is really around 2.7 lakh crore, then now services definition is very wide and almost most of the services are covered. And in the 2004-05 we had introduced this concept of cross utilization of input tax credit between central excise and the service tax. That is to say that in case a manufacturer is also making use of some services and also paying service tax, the credit of that service tax was being also allowed. Now if you look from the state perspective what was happening, so earlier we had a sale tax, again there was a denial of credit in the sale tax, there was a complete denial and there was a lot of cascading taking place. And not only that, there was also multiple taxes. There was a sort of a competition among the states that more people purchase goods from a particular state, and there was a competition, and there were multiple states. In fact, I mean the neighboring states, there were different rate of taxes. So in the 1995, there was a preliminary discussion which started for introduction of VAT in the states, and in 1999, all the states had agreed to have uniform rate of sale tax in all the states. And starting from 2005, the concept of VAT was introduced, which allowed input tax credit at each stage, but only in the VAT chain. I mean, so still we had one chain of excise and service tax, another chain of VAT, which was being administered by the state government. And again, the central sale tax was being levied on the interstate sales, but this was also not in the input credit chain. Now, what are the limitations of the present system? So firstly, the non-inclusion of several central taxes in the overall framework of SANVAT. So SANVAT essentially covered excise duty and the service tax, but there were still other taxes like countervailing duty, special additional duty, and cess, which were not covered in the credit chain. And further, like this was the manufacturing. So further you go down to the distribution. So the credit, what we were accumulating at the manufacturing stage, that was not VATable, or the input tax credit was not being given for those at the distribution chain. And again, in the state taxes also, I mean other than the VAT, sale tax, there were other taxes. We've seen entertainment tax, taxes on lottery, which were also not VATable. So thus the cascading had not been completely eliminated, and there was no cross utilization of impact tax credit of SANVAT by the states and vice versa. That is, whatever chain used to get broken at the stage when the things go to move from a manufacturer to a distributor or to a retailer. So now, I mean, there has been an attempt that we should try to remove the cascading, have a single interface, and have a single tax to the extent possible. So for the first time, this was mooted by the then finance minister in the budget of 2006-07, and it was proposed that the GST would be introduced in India from the 1st April 2010. And this empowered committee of the state finance ministers, which was also chaired by Dr. Das Gupta, was asked to suggest a roadmap and the structure of the GST. The joint working group of various officers was set up to look into the various aspects. And again, the first discussion paper, which is formed the base for introduction of the GST, so that was published in the year 2009, to be precise, November 2009. So now I mentioned earlier that since it required passing of the bill, constitutional amendment in Lok Sabha, Rajya Sabha by 2/3 majority, and then also ratification by 50% of the state legislatures, so there was a need for a consensus building, and which eluded the government because of the political reasons. Either the same party is not in the power, and anyway, it's also considered that once the GST is introduced, it could be very disruptive also, because it's something which will be totally different, and we cannot really predict what is going to happen when the GST regime. Of course, I mean, all preparations are on, but it's how it will roll out finally is still very, very, nebulous stage. So, I mean, after this government came into the power, the constitutional amendment bill was first passed in the Lok Sabha in May 2015. But thereafter, it was referred to the select committee of 21 MPs, and which submitted its report in the month of July 2015. And thereafter, the constitutional amendment bill in Rajya Sabha was passed on 3rd August 2016 and Lok Sabha on 8th August 2016. And finally, after this amendment bill was passed, it also had to be ratified by the state legislatures, which process went about quite quickly, and finally the constitutional amendment was notified in 8 September 2016. Now the key features of the constitutional amendment, I mean, I'll very briefly run through them. So firstly, because we wanted to have a single interface and reduce that the taxes should be both state and the central taxes should be simultaneously be administered. So we required a concurrent jurisdiction for imposing GST, and that is why this amendment was required, and simultaneously lot of items had to be deleted or omitted from the state list, central union list and the center list. So that's the article 246A, which gives a concurrent jurisdiction to the center and the state to levy and collect GST. Now it was also mentioned that things would move from one state to another. So that is why this concept of IGST has been introduced. Now IGST per se, if you say, it is just a transitory kind of a tax, and it's something which will further devolve into state CGST and SGST. I'd like to just give an example on this, that suppose the goods are to move from say one state, say Haryana to Punjab. So the dealer in Haryana would make payment of the IGST, but the dealer in Punjab would get the credit of this IGST, which can be used further for making payment of the CGST and SGST. So actually in the IGST kitty, there would not normally remain any balance or minimal balance, and it would be used by the dealers to make payment to the payment of the CGST and SGST. And again, it's mentioned over there that in the Constitutional Amendment 269A, that how it is to be apportioned between the union and states, it will be on the recommendation of the GST Council, and similarly the place of supply rules will be decided by the Parliament. Now, this aspect was talked about briefly by Dr. Das Gupta, but here I would like to elaborate that the compensation for loss of revenue to the state for the 5 years on recommendation of GST. Here, like, this tax is very different from the earlier taxes. It's a destination based tax. So finally the tax is going to accrue to the state where the goods are finally going to be consumed. That is why it is being anticipated that the states which are manufacturing states like Maharashtra, Gujarat, Tamil Nadu, they are likely to lose the revenue. On the other hand, the states which are not a producing states but more consuming states, say Bihar, UP, so they could be the gainers as far as the tax is concerned. So obviously the manufacturing states would not want to lose the revenue. So that is why this provision has been kept, that for the 5 years the states would be compensated for any loss of revenue. But again, I mean, making an estimation that how much revenue they will lose, because even if the manufacturing states, even if they are not mainly manufacturing states, but they are also large economies and they are also consuming states in their own capacity, and a lot of goods would also travel from outside and which they would be consuming and for which they would be getting tax now.